Do you think the public markets suit the shipping industry?
No, and I never have. I think that the public markets are there to provide investment capital, mostly of a long-term basis for industry. And shipping is dominantly run by private individuals with private companies in all over the world, and it's totally global. So it can't be identified to one geographic area. And I think that what has happened is that the shipping industry has earned a reputation as being a great place to speculate because it's volatile, and speculative capital is not investment capital.
What do you think we're going to see over the next 12 months in the public markets?
A significant number of companies going down, because if the freight rates stay where they are at the moment, which I can see no reason why they would change other than negatively, then we will see companies literally running out of cash, unable to meet their cash obligations.
Is there still cash out there for companies that want to expand?
Not that I know of. I mean, I think you've got a very difficult job. First of all, the IPO market we know is dead. Secondly, the secondary offerings, the pure secondary offerings, are being resisted because of the water-down effect, which leaves you with a method which hasn't been used much, except is popular in Europe, which is rights issues, where you actually offer more stock to existing shareholders, and that way they protect themselves from being watered down. But I think it's very difficult at the moment with the results. I mean, almost to a man, every public company's results, as they're coming off the market at the moment, are terrible. I mean, and nearly all of them are being faced with what I've talked about before, which is impairment charges because the value of the assets on the balance sheet is overstated.
What are your thoughts on the relationship between publicly listed shipping companies and investments from private equity companies?
Well, I think you have to be very careful as a president, chief executive, or an executive director of a public company as to exactly where you put your attention. Your primary attention is for your shareholders to run that company. We've got teetering on the brink one of the stars of the industry. I mean, Peter Georgopoulos' General Maritime Company looks as if it's in terminal state. I mean, he's selling assets as fast as he can. He's running out of money. Is he going to save it? Well, if he is going to save it, does that mean he's going to buy the company back at a discount, or is he going to put more money in, which is going to further water down his existing shareholders? And by the way, what about all his junk bondholders? You know, it isn't as simple as it would be if the company was private. It's all done in the full glare, and some of it doesn't look quite right. And then you've got, other companies on my list, if you like, that I think are just not going to make it through this. And TBS is one. I think Omega is another. It had, ironically, the ticker sign ONAV, which is probably very appropriate now. And so there are others. Top Ships is certainly right at the bottom now. And then you've got other ones that are Synergy. What has happened to Synergy? I thought it was backed by the rest of his family. It's now trading at a price which would have it delisted within 6 months. So where's this sponsorship and this support from these big people coming from? It's not there. If it's not there, these companies are going to go bankrupt.
So what can some of those companies do to get out of this crisis?
Completely reorganize themselves. I mean, I think the one thing that we're saying to people we're talking to is there's a couple of issues that are not being addressed. Firstly, you're not changing management. There's been no management changes in the shipping industry at all. And yet billions of dollars has been lost in ship values, no management changes. That would never happen in any other industry. So you've got no management changes, and you've not got no reorganization plan. It's just the way out of trouble, and I commented this in another article, the way out of trouble is to buy more. Why? I mean, buying and ordering more tankers in a bad market strikes me as a very bad idea, and particularly if you can't make money out of the ones you've got. So reorganize, shrink yourself, reduce your overheads, bring yourself down to a manageable level, and restructure your bank debt in a way that the bank isn't sucking every last dollar out of the company. But all of that requires a completely fresh approach.